November 2024, the most important election in the US history? Maybe. But for you, it could be the election that makes or breaks your portfolio. No, this isn't about who's better for the US. This is about your investments. Whether your money is tied to Donald Trump, the business tycoon, or Kamala Harris, the progressive force, the winner of this election will change the game for investors. Just like it has in every election before, but this time, the stakes are higher. Today, we are going to explore the markets before and after 4 past US elections. We'll investigate how the industries backed by the winning candidates outperform and whether your stocks are aligned with Trump or Harris. And stick around because things get intense. Assassination attempts, market crashes, and of course, how you can capitalize on it all. So, if you want to protect your investments and potentially make more than ever before, this is your playbook. Now, let's dive in. To understand where we are going, we need to look at where we have been. US elections aren't just political events, they are financial tipping points. Every 4 years, the markets are put through a stress test of uncertainty, fear, and opportunity. But history teaches us something crucial. Elections are predictable. They follow patterns, and those patterns can help you win. It's 2008, and the world is falling apart. Lehman Brothers collapses, housing prices are in freefall, and markets around the world are tumbling. The US economy is on life support. Investors are panicking. What do? 2 months before the election, in September, the S&P 500 falls 20%. People are scared. They're selling everything, unsure what the future holds. And then Barack Obama wins. His message? Hope. Change. But for the markets, that hope didn't come immediately. The S&P continued to slide through November and December. It wasn't until March 2009 that we saw the real turnaround, thanks to a series of massive government stimulus measures. By the end of 2009, the S&P 500 had surged 23%, and those who stayed in the market during the darkest days came out on top. So what's the lesson here? Even when things look bleak, even when the markets are plummeting, staying calm, holding your positions, even buying in the depths of a crisis can pay off massively. Elections often coincide with turning points in the market. Now, fast forward to 2012. The market is calmer this time, but there's tension. The economy is recovering, but it's fragile. The election becomes a referendum on the recovery, on Obamacare, and on taxes. Between September and November, the S&P 500 rises 2% as optimism returns. But in October, fear creeps in again. Investors are nervous about the fiscal cliff, the automatic tax hikes, and spending cuts that could kick in by year end. The market dips 5% just before the election. The uncertainty is real. But then Obama wins, and the fiscal cliff crisis is avoided. By December, the markets are back on track. The S&P 500 finishes the year up 13%. Once again, those who rode out the turbulences were rewarded. The 2012 election shows us something powerful. Elections bring uncertainty, but they also bring clarity after the winner emerges. And when that clarity comes, markets tend to rally. 2016. The election no one saw coming. Polls predicted Hillary Clinton. Investors were positioned for her victory. Then, boom! Donald Trump pulls off the upset of the century. The market panics. On election night, futures market plunge. S&P 500 futures fall 5% as investors freak out. By the morning, something strange happens. The market recovers. In fact, it doesn't just recover. It surges. In the month after Trump's victory, the S&P 500 rises 5%. Why? Investors saw potential in Trump's promises, tax cuts, deregulation, and infrastructure spending. Stock tied to Trump's campaign's promises, real estate, fossil fuel, defense, rallied hard. And here's the key. While most people were glued to the election drama, smart investors were positioning themselves in industries they knew would benefit under a Trump presidency. Trump didn't just win the election, he triggered one of the most significant market rallies in modern history. And then came 2020, a year none of us will forget. COVID-19 had the world on lockdown. The market had already been on a roller coaster, and in the lead up to the election, uncertainty was an all-time high. 2 months before the election, in September, the S&P 500 dropped 7% as the pandemic raged on. But something changed just before election day. Vaccine news was on the horizon, and investors began betting on a Biden victory. Once Biden won, markets surged. Between election day and year's end, the S&P 500 gained more than 10%. Tech stocks, healthcare, renewable energy, sectors aligned with Biden's policy exploded. 2020 taught us a valuable lesson. Election creates opportunities, even in the worst of times. The key is knowing which sectors will benefit from the winner's policies. So, what does this mean for you in 2024?
Back when I worked in a corporate, I had access to company medical insurance, which honestly, I took for granted. It wasn't until I started my entrepreneurial journey that I realized how crucial it is to align personal health insurance with both my actual healthcare needs and financial strategy. That's why I'm excited to introduce Prudential's Pro Million Med Active. This isn't your typical health insurance. It's designed in a unique active pricing feature that's particularly clever. Here's why it's perfect for those who think they're healthy and don't need insurance, or for anyone with company coverage. Pro Million Med Active offers an upfront discount on your insurance charges until you make a claim. This means you get protection while enjoying savings if you stay healthy. For those of us who previously had corporate insurance and rarely made claims, this plan lets you benefit from discounted insurance charges while still being covered. If you do need to make a claim, your premium adjusts based on the amount. For claims under 5,000 ringgit, your premium adjusts to what's called the base level. If you claim more than 5,000 ringgit, you move to what's called the stack-up level. The beauty is that this isn't a permanent cost increase. If you go claim-free for 2 years at the stack-up level, your premiums drop back to the base level. Stay claim-free at the base level for a year, and you return to the discounted rate. This flexibility lets you control your healthcare expenses and rewards you for staying healthy, making a smart choice for financial planning. Whether you are used to corporate benefits or just want a cost-effective personal plan, Pro Million Med Active provides both protection and savings. It's like having a financial tool that adapts to your health and financial needs. If you're seeking a flexible, cost-saving approach to health insurance, check out Prudential's Pro Million Med Active. It's more than just insurance. It's a smart financial decision that grows with you. Visit Prudential's website today to learn more and take control of your health insurance with Pro Million Med Active.
Now, we are here, 2024. Trump versus Harris. Two very different candidates with two very different versions for America and for your investments. As we stand on the brink of the 2024 election, the winds of sentiment are blowing in a very particular direction towards Kamala Harris. The polls, the debates, and even the broader public mood are signaling a shift. Harris is seen by many as the candidate of the future, the one who will push for innovation, social progress, and sustainability. But sentiment isn't just about what people think, it's about how they act, especially in the financial world. Investors are starting to position themselves accordingly. The sectors that are tied to Harris' platform, tech, healthcare, and renewable energy, are already seeing inflows. It's a quiet shift, but it's happening. Let's break this down. In the tech industry, Harris has made it clear that innovation is at the heart of her agenda. Companies in artificial intelligence, cloud computing, and clean technology are all feeling the tailwind of a potential victory. Think Tesla is not just a car company, but as a tech-driven leader in renewable energy. Or Apple or Google poised to benefit from a Harris administration's focus on data privacy and tech infrastructure. On healthcare, Harris has been an advocate for expanding healthcare across and reforming the system. Investors in pharmaceutical and biotech companies are banking on a continuation of support for these industries, especially in the post-pandemic world where healthcare innovation is still at the forefront. And for renewable energy, this one's a no-brainer. Harris is a big advocate for clean energy. These companies stand to benefit not just from government contracts, but from the regulatory environment she is likely to create, which would encourage investments in sustainable energy. So it's clear, if Harris wins, these sectors are positioned to soar. But here's where it gets tricky. Donald Trump has defied the odds before. No one saw Trump winning in 2016. The polls were all wrong. The media was certain he wouldn't win. But on that fateful night, he shocked the world and the markets. Investors were caught flat-footed, with many scrambling to adjust their portfolio after his surprise victory. But those who had bet on Trump's success, those who hold stocks on industries like defense, fossil fuels, and manufacturing came out on top. Now, election years are notorious for one thing: volatility. During the last 4 elections, we have seen the S&P 500 experience a 20% increase in volatility on average. For investors, volatility can be either a nightmare or an opportunity. If you are a seasoned trader, you know this is a prime time to capitalize on big price swings. Futures trading becomes especially appealing here, allowing you to take advantage of short-term market movements without necessarily committing to long-term positions. But what if you're a more risk-averse investor? Election year volatility doesn't mean you have to panic. Instead, consider rotating into safer sectors like consumer staples, utilities, and dividend-paying stocks. These are the kind of stocks that tend to hold up well during times of uncertainty. They provide steady returns and often pay dividends, which can cushion you from the bumps in the road. Look at it this way: while others are riding the waves of volatility, you could be sitting on a boat that's built for stability. It's not always about chasing the biggest gain, it's about protecting your wealth during uncertain times. Here's where it all comes together. History repeats itself. What we have seen over the last 4 US presidential elections is a pattern, a rhythm if you will. In 2008, markets panicked, but those who held on through Obama's stimulus measures ended up on top. 2012, the fiscal cliff looms. Markets dip, but after Obama's re-election, things stabilize and the rally continues. 2016, Trump's shock victory causes market chaos, but then we get the Trump rally, boosting stocks tied to his policies. And in 2020, uncertainty and the pandemic lead to extreme volatility, but Biden's win and vaccine optimism push the market to new highs. And now, 2024 is shaping up to follow the same pattern. Volatility is high, investors are taking profits, and the market is bracing for the unknown. But here's the thing, the smartest investors know that this is where opportunities lie. While others are fleeing, they are positioning themselves to take advantage of post-election rally. So, what does this mean for you? Whether you are betting on a Trump win or a Harris victory, now is the time to prepare your portfolio. Here's what you should be thinking about right now. Number 1, diversify your portfolio. Don't put all your eggs in one basket. Make sure your investments are spread across different industries and asset classes. If you're too exposed to one sector, say energy for Trump or tech for Harris, you are at risk. Balance your portfolio so that no one single outcome leaves you overexposed. Number 2, consider hedging with futures. For more experienced investors, election year volatility can be a gold mine. Futures allow you to hedge your position and take advantage of big price swings. You don't need to be a pro to explore this strategy. Start small, learn the ropes, and see how you can protect your investments. Number 3, rotate into sector assets. If you're not comfortable with volatility, rotate into safer sectors. Dividend-paying stocks, utilities, and consumer staples are your best during election uncertainty. These assets tend to hold up well and provide a cushion in turbulent times. The point is, the market's not going to wait for you to decide. You need to make your move now, whether that's positioning for growth or protecting your wealth. Here's the bottom line. Every election creates fear, uncertainty, and doubts. But the truth is, these moments are also where the biggest opportunities lie. You have seen how markets react, you have seen the pattern, you know what to expect. So the question is, are you going to sit on the sideline and watch? Or are you going to step up and take action? Because the investors who take action during moments like this are the ones who win every single time. Whether you're preparing for a Trump win or a Harris victory, the time to make your move is now. Don't wait for the market to react, get ahead of the game. Hit subscribe, follow along, and let's navigate this election together. And remember, if you don't take action, you will never see your portfolio grow.